Greg, should investors be wary and fearful of the market action we saw yesterday?
I don't know if fearful is the word. I think that it is a signal that we need to be more discriminating. Recall, Dom, that I have long said that I thought that this great rotation or rate cut rally, whatever you want to call it, probably had shorter duration than most anticipated because it was looking through some likely realities. The reality that tech would reclaim its leadership position due to differentiated earnings. The reality that, however big the magnitude, that we would likely face a slowdown of some sort, and that would be felt most acutely down market. While the positioning for a rate cut certainly helps on the balance sheet side, I don't know if it helps immediately on the top line side. So I think caution is appropriate, discrimination is appropriate, but certainly not fear. Will probably be range bound.
Greg, what exactly then do investors look for? What opportunities are going to be created? What's on your shopping list?
So, look, I think for us, we always want to go where the earnings growth is. And, you know, we've gotten a little bit away from that over the last couple of months. And again, I think what you've seen in the last week is tech reassert itself with all these companies putting up 30% in the cloud, with the exception of Amazon Web Services, which was a little disappointing. But across the board, you know, when you looked at Microsoft, when you looked at Google, and they, more importantly, indicated that they're going to increase spending dramatically. So that helps down the chain. And when you look for the companies that are going to grow earnings 20 to 30%, look at that spending. They're sending us a message. I think we should listen to it, because when we get into the slowdown, I think investors will start to differentiate again between those companies that are only going to grow earnings low single digits and those that are going to grow 20% plus. And I think we'll see breadth re-narrow around those in that latter category.
All right. And what names specifically are they? We just got a few moments left here.
Sure. I think you can obviously, we're getting a price break on some of the natural leaders. NVIDIA's caught a tailwind based on that commentary around spending. The data centers are obvious beneficiaries of that spending. And you can even go down market cap if you need some small cap. Go down to the Vertivs and the Powells of the world that supply infrastructure and services to those data centers. The whole chain will be beneficiaries.